Welcome to our Bay Area Housing Market Town Hall. And we are very excited to share with you the housing market data for the month of December. As we are very surprised, the month of December has been very, very busy. But also, there are a lot of rumors about 2021 housing market crash and also if it's caused by this California exodus. So I would love to share these data and statistics with you to see if this is really going to happen in 2021. And on top of that, I thought what's better than showing you the actual case studies and the offers that we have made during the month of December so you can see the competitiveness on the market for different areas and different asset type as well. So please do like our video and also subscribe to our channel so that you'll be notified whenever we have new videos. And as always, I welcome for your new idea of what you would like me to share so I can continue to produce more relevant educational videos for all of you. Thank you so much for watching, and I hope you enjoy it. So let me go ahead and take a look at the Bay Area housing market statistic here. As you can see here, for Santa Clara County, for single family, the number of sales compared to last month, this is like November and here is December. November, we had less sales compared to October, and then December, we have even less sales compared to November. And same thing happened to condo and townhome also. However, the number of sales actually more compared to a year ago, so in 2019. And the median sales price has gone up to actually it went up to 1.385, but it came down a little bit slightly by 0.6% compared to November for 1.377. Typically, it's pretty common in the December because of a slower market, although for us, we really don't see, I think the activity was way more active compared to the December before in 2019. And therefore, you see that the price has gone up 11.8% compared to 2019. And condo, it did go up by 8% compared to 2019. But if you look at the days on the market now, days on the market, we are right around still 19 days versus 22 days in December. Is slightly more, but it really is not that much more compared to a year ago. We definitely have dropped quite a bit. And of course, condo and townhomes, we are still seeing a little bit higher in terms of days on the market for Santa Clara County. What about San Mateo County? As you know that we've been talking about this for quite a few months now. San Mateo County, we have seen a little bit of a decrease on pricing, but very interestingly, last month in December, it actually went up 3% compared to November. So the price had gone up a little bit, and it stayed on the market for about 30 days instead of 27 days. And did definitely stay on a little bit longer. And we see that we have less, like 3.15% less in terms of list property. And for the condominium, the price did drop quite a bit. Again, condominium and townhouses definitely get hit a lot harder no matter which county you're in. So you see that the price has gone down 9.9% for condominiums and townhomes, and it also has a lot more stay on the market a lot longer, and it has more property actually closed in the month of December. So we have more properties closed, but at the same time the price still had gone down. So we're going to take a look at a little bit of the statistic later to give you a sense of like why the condos market has gone down, and also if that's a good time to actually come in and buy the condominiums now. Now, these are the East Bay markets, and East Bay market, this is the 880 corridor, which you see that it's like Union City, Fremont, New York, all the way up to Berkeley. And you see that home for sale has dropped, for December, of course, it has very little home sales. I don't know if you guys have been looking at the inventory, but every single buyer we've talked to, they all told us that, my gosh, there's nothing to see. And it's true that the inventory is very, very low. And the price is still continue to go up. As you see that in 2016, it was less than 800. Now it's almost inching up to close to $1 million for the median sales price in this 880 corridor. In terms of Tri-Valley, same situation. The home for sale peak in May, and then the number of sales just keep going down, especially because, as you could tell, it was during the COVID. So a lot of sellers actually are holding back and not wanting to put it on the market. But the pricing, same thing, has gone up to 1.251. Now, so what is happening on the battleground? What kind of offers we've been offering? As you see here, Los Gatos, we have made an offer for a single family. Asking price was $2.7 million. There were 6 preemptive offer, meaning that people just did not want to wait for the offer deadline. They just jumped in and offered. But in the end, sellers said, we're going to wait. And the 14 total that made an offer on the offer deadline, and it had sold $300,000 over the asking price, which is over 10%. So this is in Los Gatos. South San Jose, one fixer, $925,000 asking price, got 30 offers. This was literally right during the Christmas break. And at the end, it went at 16% over asking price. Another more updated one, 999, they got 13 offers. As you see, fixers, very popular. I mean, still updated, still have a lot of offers. It actually went 20% over asking price, and 8 out of the 13 offers went above 1.1. So as you can see, South San Jose didn't see this kind of competition in 2019 and 2018, but now you definitely see a lot of competition even in the South San Jose area. Now, Daly City, there's a townhouse that's asking 1.065, stayed on the market for 106 days. Eventually dropped the price to 988, no offer. Sunnyvale townhome asking $1 million. They did get 6 offers, so it's still competitive because of the location. Sunnyvale, it went over $50,000 above listing price. That's just slightly about 5%, but you could tell how the difference is between like single family versus townhouse. And condo in San Jose asking was 1.065, didn't get any offer. As a matter of fact, they dropped the price by 6%. It's still on the market. And then, of course, Central Valley, Stockton, there are 5+ units apartment, asking price $760,000. Didn't get any offer, and it's been on the market for 80+ days. So what is going on with this market? The market has been so hot. There are still people are able to sell property. Actually, the real estate practice has been kind of, wonder if it's permanently changed. One big thing, of course, is that, open houses, there's no more open houses. And that used to be the way to sell homes, right? You want to do open houses, you want to attract a lot of people coming into the house. But now you don't need to do open houses, and you can still sell a home with that many offers. And as a matter of fact, in my eyes, without the open houses, it's actually safer for the homeowners. You don't have to worry about random people just walking into your home. Trust me, when we used to do open houses, a lot of people came in. We used to have 2, 3, or even 4 agents to be at the open house, just so that we can keep an eye on everybody to make sure they're not stealing anything. So it is safer for the homeowners. It is safer for the real estate agents. As you know, it can be pretty dangerous for somebody who just sit at a open house with no one around. And also buyers really get the best representation from the real estate agents, really understanding, walking through the property by themselves and looking everything carefully. So as a matter of fact, I do believe that this is really should be the way to go. And this is going to be a way to elevate the real estate standard to making sure that buyers are being represented the right way by our real estate agents. Now let's look at residential loan. So this is the mortgage rate for today. Wells Fargo has shared the interest rate for jumbo 30 years. It's 2.875. We've been seeing this rate for a couple months now, but it's still holding up pretty strong. And this is the mortgage rate projections by different agencies. Again, they did change a little bit if you notice. And right now they have projections all the way to 4Q. The past few ones that I share with you only projected up to 2Q 2021. So Freddie Mac just have the same rate across the board. Fannie Mae believe that 3Q, 4Q is going to inch up slightly. Mortgage Banking Association, they believe that it's going to actually inch up a little bit starting 2Q and then went to 3.2 starting 3Q 2021. And National Association of Realtors, same thing. It seems like it's inching up to 3.2 by 4Q 2021. So I think everybody, most agencies are predicting that the interest rate, the mortgage rate is going to go up, but may not be going up that dramatic, but it's still going to be going up a little bit. Now, I know a lot of people are really asking about, again, the housing crash in 2021. If you type in this term, you see a bunch of videos about housing crash. And then they talk about California exodus. Everybody is leaving California. So I really want to touch on a couple of these things during this housing market updates. Now, if you know that obviously Oracle just decided to move, right? So that was a big news. Another tech giant had moved out of California. But don't forget that we still do have a lot of other tech giants in this area. And Oracle actually been talking about leaving California for a while now. And Google had already committed to invest $1 billion into addressing the Bay Area housing crisis. And Apple also, same thing, committed for $2.5 billion plan. And Facebook, $1 billion to address the housing affordability. And then another recently pledged another $150 million to build homes for Silicon Valley's poorest. Why I'm sharing this is because these major employers, these tech giants, have invested so much in Bay Area. So we still have a lot of very strong companies here. Yes, we do have some companies leaving, but really, if you look at percentage wise, it's still not that much. So although I absolutely admit that there's a lot of people, a lot of companies are moving and considering moving, but will this really affect the housing market in California? I think that's the biggest question. So let's keep looking at the other information that I want to share with you guys. Now here is from CoreLogic, is talking about like home prices increases year over year in different states. Surprisingly, here, there's not one state that has negative number, negative change. So all the states within the whole United States, they all have a positive increase in the house prices. Now, the top 10 states with the biggest housing price change are these: Idaho, Maine, Indiana, Montana, Arizona, Utah, New Hampshire, Vermont, Missouri, and Rhode Island. And these 5 are the top markets, according to CoreLogic, are the one that has a risk of home price decline, which is Prescott, Arizona, Lake Charles, Louisiana, Miami, and Florida, Brownsville, and Texas, and Gulfport, Mississippi. So these are the 5 areas. And we always say, we repeat this over and over again. It really depends on the area. Even the United States in general, we're doing great, but we have to look at each market individually. Now, when we talk about housing crash, typically housing crash is caused by, of course, there's a lot of economic data, but at the end of the day, is that foreclosure will be one of the biggest thing that can cause housing crash, which happened in 2008. Now, the thing is, when we look at national homeowner equity, meaning that how much homeowner had increased their equity, they all average about 10.8% 3Q 2020. This is year over year change that's increased by about $1 trillion total. And how many homes actually have negative equity? It actually went down 18.3%, meaning like there are less people who owe more on the property than the property is worth. So this is like went down 366,000 homes in the country, in the entire country. So if you look at Americans are really sitting on tremendous equity right now. 42.1% of all the homes are owned free and clear. And the 58.7% of all the homes in America have at least 60% equity in there. So the average equity of the mortgage home, 177,000. I mean, I think this chart says a lot. Not only it talks about, we have tons of equity, meaning that if, let's say, they cannot afford to pay for the mortgage anymore, they are at the risk of being foreclosed, they can also put it out on the market and sell it. And getting the best price possible, because typically you get your property being foreclosed on is because you cannot sell it on the market. So with the equity that a lot of homeowners still have, it actually make it a little bit easier to sell. And the second thing is that, I'll go back to renters versus owners. This is talking about average equity of a mortgaged home. And if you you're still, decide to rent, you are missing out to build your equity. And this is tremendous, $177,000 equity. That's a lot. And then also want to show you guys on the percentage of delinquency back in 2010. That's like the time during the recessions, 9.3%. And then as you see, when the market was doing much better, it went down to 4.4%. Why I'm sharing that with you is because, delinquencies improved in November 2020. There are still 2.2 million seriously past due mortgage payments. But if you look at the number here, these are the 90 plus days delinquency. These are the top 5 states that have the worst delinquency with 90 plus days. And that's Mississippi, Louisiana, Hawaii, Nevada, and Alaska. And they are at about 5.61 to 6.58. Nothing close to the 9-point-something% that we were just looking at earlier. And of course, again, California is not one of them. But here you see that the top 5 states by 6-month improvement in non-current percentage, California is within the top 5. So we are down to 4.95%. So this is just, again, we're talking about Bay Area, California market. So we just don't see that foreclosure is going to be a factor that caused housing crash here in 2021. This is through a survey, and this is asking, like, after the forbearance outcome, what percentage of these 2.7 million homeowners you estimate will actually resume their mortgage payments, and that's 58% from this survey. And the projection changed. Last time we shared with you, last year, I should say, we shared with you these organizations projected the home appreciation for the next 12 months, which is in 2021. And now they changed it slightly. So you'll see that Zelman had changed from 5.9 to 6%. And remember, they used to be about 3% and then went to 5.9 and then now went up again 6%. And Freddie Mac went from 5.5% actually down to 2.6%. And National Association of Realtors went from 4.7% to 6%. And also Mortgage Banking Association went from 3.1% and went down to 2%. CoreLogic went from 0.2% and went up to 4.1%. So again, that all of them, although some of them went down, but all of them are still forecasting that home prices is still going to continue to go up. And I really want to share this chart with you guys because I was just plugging the numbers and I trying to think about, like, what are some of the homeowners or home buyers are talking about, thinking, oh, the market might crash. So I was like, okay, let's run some numbers. Let's do this as a default scenario, buying a $1.5 million property in the Bay Area, 20% down, loan amounts 1.2 at a 2.875%. Your mortgage payment is almost $5,000. And if you, let's say, saying that, the housing prices is going to drop by 10%, that means that, but then interest rate, don't forget, in 2019, the interest rate was right around 3.875 at that time. So it can go back up to that level easily. And at that time, we were still talking about historical low. So then your monthly payment actually went up slightly still, just because there's a 1% increase in the monthly payment, despite you have a decrease in your purchase price. So monthly payment increased by 2% slightly. And what about if you just wait around a little bit and the price, does increase? As you saw that if you make an offer, they all go up by 10% increment or 20%. And what will happen? The next round, you get a 1.575, then 20% down is 315,000. Even at the same interest rate, your monthly payment now has gone up 5% to about 5,227. And then another scenario would be like, okay, I'm just going to continue to wait. And as you saw that we just talked about, the pricing is probably going to continue to go up. And let's just say it went up 5%, rate increased by just 0.5%, then what will happen to your monthly mortgage payment? It actually went up by 10% to almost about $600. So this is the reason why we see so much competition and why people are so aggressive, because they just don't want to wait until the price increased by 5% and the rate increased by 0.5%. That can make a big difference of $600 per month. And that's almost $7,000 a year. So this is the reason why we see so much competition on the market. All right, let's take a look at multifamily market updates. And we have the commercial and multifamily mortgage delinquencies here. Good news is that apartment will still have relatively low delinquency compared to the hotels and as well as retail. And also, this is from the National Multifamily Housing Council, the rent payment tracker, where January is at 76.6% paid. But remember, there are only 3 weekdays until January 6th. But typically, you see that if you look at the full month result, it's actually all above 90%. And Marcus and Millichap had given some comments about different markets in the Bay Area. Central Valley market, the vacancy reaches record low. San Jose market, this is the market that everybody think that will lead the comeback after the health crisis. And San Francisco market is that they do believe right now you probably can get some good deal. And even though some major tech companies has shed only 5.3% of overall positions due to the recession, these high-paying jobs should help accelerate a recovery when the economy reopens and tech workers resume dining and shopping habits. And you'll see home prices continue to go up, but rent prices has come down quite a bit. And they do expect that the rent prices continue to go, it has gone down in 2020, but actually expect that it's going to come back up, but a lot more conservatively. And here is that some people, they did a survey to ask, when do you think that the rent price is going to come back to the normal 4% increase per year? And a lot of them believe that it will be 2022 to 2023. That's when the rent price is going to exceed the 4% mark. All right, and I think we talked a little bit about this regarding rent control. I truly believe that rent control is not the answer for housing affordability. It's actually hurting. At the end of the day, it is really the housing supply. And that's why I hope that, with those tech companies, tech giants, if they truly can commit billions of dollars to help solve this housing crisis here in California, that will be the best way to go. And here we are, as we know, we are getting these federal rent relief, and we just don't really know where the money is going to. And we keep talking about hearing that, California going to extend eviction moratorium. News after news after news about canceling rents. What are we doing to help our landlords? And that's why today we have invited Joshua Howard. He is the Executive Vice President of the Local Public Affairs for California Apartment Association. Thank you so much for watching our YouTube channel. And don't forget to subscribe to our channel, like our videos, make some comments, because we're going to keep you posted on the most updated real estate news, housing market data, and also real estate tips and advice from all over the real estate industry. So thank you so much for watching, and I'll see you next time.